Let's kick off with some comments that we had out of the ECB, from the ECB president yesterday, saying that the single currency is irreversible. He has no doubt in euro strength going forward. This contrasting slightly to comments he made to the Financial Times previously, where he warned of a eurozone breakup. What are you reading into the latest comments from the governor?
Well, there have been a number of developments in the Eurozone, I think, since he made his initial comments that expressed concern about the future of the Eurozone. We've had the outcome of the summit. Although markets didn't react very favorably to that, it does commit the nations in the Eurozone to continuing with the single currency and to greater fiscal prudence. So that's certainly a positive move as far as consolidating and keeping the euro area intact. We've also seen some moves yesterday where they bolstered the rescue fund through the IMF. So certainly it does seem that euro leaders are committed to the future of the single currency, and I think that's really where those comments are coming from.
What are the key themes that you're tracking today and that could affect the currency market? It appears a bit of risk on in the market, sitting with the euro dollar pretty much steady, but the euro is slightly stronger there. The rand is also 0.5% firmer. So what themes are you looking at to define the market trade today?
Well, certainly the market mood does seem to be a little bit more risk on. Yesterday, I think largely affected by the developments that we saw in Korea. So today, with that having dissipated somewhat, the markets do seem to be largely positive. We're seeing commodity prices up, and although Asian markets are a little bit mixed today, it does seem that things have settled down somewhat. So we do see a better trading day for the rand today. It could consolidate or even strengthen a little bit further. But as far as themes go, there's very little in the way of data flow. So a large part of it, I think, will depend on what further developments come out of Europe or what happens with US data later on this afternoon.
Let's throw forward into 2012. You were saying yesterday that we could see the euro go all the way down to a 120. And of course, we looked at what this would mean for the rand. What are your expectations for capital flows into South Africa if we do see the eurozone region going into a recession, which of course many are saying is imminent?
Well, that would obviously have some quite significant impacts on South Africa. Should the Eurozone go into recession, one would expect capital flows to dry up slightly, as we've already seen in the second half of this year. But that's, that of course would depend on how severe we see that recession being, and what is happening in the rest of the world. So if the US continues to recover and perhaps picks up speed, that might mitigate to some extent the effect of the Euro recession. But certainly we are expecting capital flows to be a little bit lighter in the first half of next year compared to the first half of this year.
Month to date, though, we have seen a net outflow from the equity market, but of course a positive inflow into the bond market, and that's helped to buffer the flows that we've seen for the month to date. As you can see, we've got net inflow into equities and bonds sitting at 623 million rand. As you say, your projections for overall in the year are that we could see an outflow as a result of some risk aversion. But January, what are we likely to see just for the month of January?
Well, it's very difficult to pin it down to 1 month in particular. A lot is going to depend on what happens to the Eurozone crisis, but I would certainly anticipate that bond inflows could well continue because the yield differential that South Africa offers remains quite attractive. So I would expect to still see some continued inflows into the bond market, perhaps some continued outflows in the equity market in line with the trend that's been established this year.